Few words strike terror in the minds of investors as much as the term inflation. For few investors, it may appear to be a terrible fiction designed to scare young children on Wall Street. But investors who have been through the tough times understand how hazardous little increases in inflation can be. With the likes of Warren Buffett, Bill Ackman, and Charlie Munger warning an approaching high inflation, it is time to go further into what we can do to protect ourselves. Inflation, according to Warren Buffett, is like a tapeworm that becomes longer over time. He has cautioned that if left uncontrolled, the consequences might be more disastrous than all the wealth reductions such as taxes and the like. Annual inflation rates in the United States increased to 6.2% in October of 2021, according to the Bureau of Statistics. It is the highest since November 1990, and it's over the whole expenses of 5.8%. This position is certainly not ideal, since investors will be unable to develop their capital at the time due to the combination of taxes and inflation devouring everything. We have no option but to listen and attempt to learn what we can when the finest investors raise alarm bells. In that spirit, I've created this video to assist people to understand how to profit from the upcoming inflation surge. But first, if this is your first video at the Smart Stocks Academy channel, let me welcome you. To be the first to know when a new video like this is released, don't forget to hit the like button, subscribe, and click the notification bell to be notified when we have a new video. Now, if you're ready, let's get to the topic. Stocks have been proven to be one of, if not the best outright investment costs throughout history. Stocks continue to be a top investment to consider during periods of rising inflation. What sort of stocks to choose when inflation is an issue that emerges. When choosing stocks during an inflationary environment, the process you utilize changes slightly from typical periods. Not all stocks are excellent for high inflation periods. But by applying the selection criteria, we can find the top inflation-resistant stocks in your portfolio to not only protect you, but also make millions. Let's get to that criterion right away. Stocks in your portfolio should be low capital demanding in order to continue operations and profits growth. These include Kraft Heinz, Facebook, and Google, all of which are particular favorites of investor Michael Burry. In general, consumer goods and technology firms demand less upfront cash to operate their systems. In contrast, saving airlines necessitates substantial financing. Airline stocks would be a poor fit for your portfolio in this situation, as they would be awful in a period of high inflation, as airlines require a lot of money to operate in an atmosphere plagued by inflation, which devalues money's purchasing power. These enterprises must continually raise their prices to keep up with inflation, and it becomes a never-ending cycle that will finally lead to a business demise and, as a result, their stock's value demise. Investing in such enterprises, according to Warren Buffett, is like someone sprinting upward on a downward-going escalator. Google, on the other hand, doesn't need to raise service costs very much, so they don't lose customers and their stock price remains stable. This is why it is critical to keep an eye out for firms that require little cash to operate and develop. When I say invest in a business with high pricing power, I mean invest in a firm with a solid customer base that will remain loyal even if the company's costs rise. When inflation is significant due to rising prices of raw materials and all services, a corporation may be obliged to raise some prices in order to remain profitable. If a company has poor pricing power, it suggests that if they raise prices, customers would abandon loyalty and go to their competitors in search of lower costs. On the other hand, if you pick a firm with great pricing power, you can be assured that sales will not be affected significantly by a price shift, and so both the company and the stock will continue to prosper. When a company has to borrow money to develop, it can become a huge issue during periods of high inflation. This is because, in order to protect themselves from excessive inflation, lenders and lending institutions demand high interest rates on the money they lend out. If you invest in a company that borrows frequently, you will end up with a company with a lot of debt. That will not speak well for the company in the long run, and its stock will undoubtedly suffer as a result. Simply based on the selection criteria, it is vital to invest in companies that can answer these three questions. Only then can you have the stock that you can profit from in times of strong inflation, potentially creating millions of dollars for you. Inflationary hedges such as gold and silver have existed for a long time, because gold and silver is internationally recognized and valued, and their worth exists outside of the US currency. They may maintain their value during periods of rapid inflation. Putting money into them protects you from future losses due to inflation. TIPS is a form of US government bond whose principal value is linked to the rate of inflation. When inflation rises, the primary value of TIPS is increased. When there is deflation, the main value is reduced. TIPS is a type of investment that protects you from inflation and is widely endorsed by investors such as Warren Buffett. They are worth considering as an investment alternative in the face of excessive inflation. Real estate has historically been a cash cow when handled properly, and you may gain from it even during periods of severe inflation. As you can see, real estate is tightly linked to the Consumer Price Index, which closely tracks commodities and services. When the cost of products and services rises, it accidentally lowers the cost of building new houses, making existing homes more desirable. As a result, everyone who owns property will see its value rise. Real estate is also a great asset to have in your arsenal because of its scarcity value owing to the finite nature of land. Another fascinating truth about owning real estate, particularly if you have a mortgage on it, is that because mortgage interest rates are fixed regardless of inflation, you will be paying the same rates but in inflation-adjusted dollars. This can be really beneficial to you, as you may continue to earn revenue while beating inflation if your real estate investment is operated as a rental property. You can't tell me that isn't a winning formula. Oil, for example, is a natural inflation defender, which makes it ideal for high inflation returns. This is due to the fact that commodities and inflation have an inverse relationship. Commodities can also be traded on the futures market, where they can be bolded and sold at a future date. This enables you to pursue a proper moment to sell in order to achieve the best results. Unlike commodities and everything else I've said so far, there are some fantastic asset classes and investments that are bad in high inflation country. In a moment, I'll say a few words about this, but consider it an extra tip for sticking it out for so long. Bonds are a fantastic investment to have in your portfolio while inflation is low, but they are dreadful to hold when inflation is high. This is due to the fact that they have a very low interest rate attached to them. As a result, in a circumstance like 1979, where inflation reached about 14%, the tiny interest rates that come with bonds would be completely destroyed. Holding bonds in a high inflation environment is akin to being enslaved. This one is more about a bad habit than an investment. Investing in a single stock with the expectation of making a lot of money is as destructive as it is unsafe. As we have seen before, it is possible to hit the jackpot. if the market goes against expectations, that one stock is more than likely to be crushed. Diversification is your friend during moments of high inflation and volatility. Diversify your portfolio across different industries while also remembering the stock selection guidelines I outlined previously inside this video. That is the only way to emerge somewhat undamaged from this phase. Finally, inflation is on its way, and as Charlie Munger puts it, it is coming to take it all. However, with the knowledge gained and shared in this video, you may not only preserve your money, but also expand it into the millions of dollars you've always desired. Even if you're a novice, you will find this material useful. Don't forget to make your own luck. Who needs a pot of gold at the end of the rainbow when you can make your own fortune in the rain? And with that, today's video comes to a close. If you haven't already, hit the like button to show your love and support. Also, don't forget to subscribe to the channel and clicking the notification bell next to it to be the first to know when we have a new video like this. Thank you for stopping by. We hope you enjoyed it. And I hope to see you in another video.